What's up? Came to do a quick video on Atos and the potential that I see for a huge gamma squeeze coming up here before July 16th. Before I get into it, someone pointed this out in the live stream this afternoon during the Power Hour live stream. Thank you very much for kind of bringing this to my attention. I tried to do a little research on it, and I should point out that any of these gamma squeeze type plays are very risky. I mean, obviously, market makers are going to try to suppress the price of the stock before expiration so that they don't get caught with their pants down. But it already looks like this stock has been running, and I think it's going to continue to do so. I don't know much about the company. I did a little bit of research into it. Looks like they're into cancer research and specifically breast cancer. And there might be some potential catalysts being announced in the coming weeks. On top of that, they recently got included into the Russell 2000, which could explain some of the buying that I'm going to show you on the charts. But also, there was some speculation that I kind of looked up when I was looking at it that there might also be some funds that are still acquiring shares of ATOS for the Russell 2000. So there might be some more buying coming in. None of that really makes a difference, though. All I'm looking at here is a potential play for a gamma squeeze based on the option chain. Again, very risky, but if it happens, high reward, high payoff. So let me pull up the chart first. This is the daily chart of ATOS. It's Atos Therapeutics. As you can see, back on April 21st, actually April 19th, it was trading at $1.48. And you got the stock hit $9.80 a couple days ago. It's now trading at $7.22. Why would you buy into a stock that's this high on a run that you don't know anything about? We've seen the potential for one that when it's come up, it'll kind of consolidate for a couple of days, and then it's been continuing to run. But again, it all has to do with the options chain for me. So the float on this stock is somewhere around 100 million shares, which is relatively small compared to the open interest I'm about to go over. So, and actually, you know what? Before I even get into that, I'll just give a brief summary of how a gamma squeeze works. And if you want more detail, I did a couple videos on clove gamma squeezes in the past that get more in depth. But basically, open interest is the number of calls at a specific strike price. When calls are sold naked, and the closer they get to in the money, and once they get in the money, the delta on those calls increases, which also is amplified by the gamma, which is why it's called a gamma squeeze. But basically, when you look at the delta number, that's how much a market maker would potentially have to hedge, and they have algorithms that pretty much do this for them. So it's not like someone sitting behind a computer pressing a button. Anyways, so back to the option chain. So again, 100 million shares in the float. But if you look at this, so right now, ATOS is currently trading around $7.22. Open interest that's already in the money, 19,000, 14,000, 28,000, 14,000, 23, 14, 21, 21. And these are all, contracts that account for 100 shares. So if I put that into even more perspective, 2.1 million, 2.1 million, 1.4 million, 2.3, 1.4, 2.8, 1.4, 1.9. That's a lot of millions of shares for a stock that only has 100 million float. On top of that, from about the 450 strike on is strike prices that already aren't at a 0.9 delta, which means, like, for instance, this $6 strike has a 0.71 delta. 71% of those shares can assume to be hedged already. As the price continues to go up, if it does, there's another 29% of those shares, which is 1.9 million shares, that would need to be bought and be hedged. These also, even if the price was to stay still, the closer we get to the expiration, the more that these algorithms will continue to hedge. Now, if we continue to move upwards, if it gets past 750 and upwards of 9, not only are we going to get some firepower from these strike prices that are already in the money that need to continue to be hedged, but you're looking at the 750 mark, 53,000 contracts. At the 750 strike, 57,000 contracts at the $9 strike. And there's not a ton of offsetting puts there to really make a difference. So as this stock continues to go forward, you're talking about, and these are roughly around 50% hedged right now. So you're talking about probably 5 million shares, 6 million shares that are going to need to be bought to hedge these contracts, which is just going to push the price higher. And as we continue to go forward, 17,000 at the $10 strike, 9,000 at $11, and another 50,000 contracts at the $12 strike. This has major potential, in my eyes, to continue to go up before July 16th and possibly blow out this option chain, which right now is sitting at $16. I can see this stock potentially moving up to, during a gamma squeeze, definitely pushing past 16 and maybe hitting 20. So right now, what I'm looking at for a play, and again, this is entirely just a straight up bet. I'm going into this with money that I'm okay with losing, that I'm just going to throw a little cash at this and see what I can do. So for me, I'm probably going to go in here and look at this $10 strike, just because it's under $1. It's not too far out of the money. And really I'd be banking on the 750 and the 9. And that, so basically these contracts will cost me about $95 a piece. And also throw some FDs in there, which is basically top of the option chain, $16 strike. You'd probably be able to get these for about 50 cents a piece. Maybe a little more, maybe a little less. So I'm going to look to split between the $16 strike and the $10 strike. Grab some calls tomorrow morning and close my eyes and see what happens. I mean, again, I think anything's possible. And with the type of momentum that this stock has had so far, average volume over the last 30 days was about 17 million. But just recently, we've seen 76 million, 22 million, 53 million, 91. And it looks like the RSI is just starting to cool down and maybe get ready to take another run. And all we really need on this play is for this stock to get past probably $8 for some big movement and a gamma squeeze to kick off. So again, high risk because this stock is so high up right now, and it's going to be pretty volatile, but at the same time, big reward. And those are the type of plays that I like to bet on, and that's why I'm making this video. I'll be opening up a position tomorrow with some calls. I just got to free up some capital. If you'd like to follow me some more, hit the subscribe button, like the video if you're if you're enjoying it. And at the same time, I'm live streaming every morning from 6 a.m. to 8 a.m. on the West Coast. So if you want to come in and jump in, a couple stocks that I'm following, and then ATOS will be one that I'll start to cover. All right, have a good day. Good luck in the market no matter what stock you're in.